In the tax return season, but for anyone expecting a refund, well, those folks usually don't waste any time filing.
Yeah, the average tax refund is nearly $3,000, so what should you do with the money? Terry O'Grady with the VALIC Financial is here with us. And Terry, I would have to imagine the first thing that you should do, or the thing you should try and concentrate on, is paying down debt.
Well, you definitely want to get out of debt, but first with that tax refund, you probably don't even want to get that tax refund. We can talk about that as we go, but you're really giving Uncle Sam an interest-free loan all year. It's your money that you could have had in your pocket all throughout the year paying off debt.
So you're saying don't get that refund. You're saying be a little bit smarter maybe in what, the W-4?
Yeah, go to HR,
okay.
Adjust the W-4, get more accurate withholding. That way you have more in your paycheck throughout the year that you can either put toward debt or put into your 401k or some other kinds of savings. So yeah, so
when we're talking about paying down debt, though, what should we start with? Because, you know, a lot of people carry like house payment, they carry, you know, student loans, they carry other things, credit card debt. What should they look at and how should they pay them down?
Well, most people think if you pay off the highest interest rate loan first, if you do the math, that's the black and white math, that's going to be the way to go. So you pay the highest interest rate credit card or the highest interest rate loan first. But that's the black and white math, and we've found it's not really about the math, it's about behavior. So we're looking for some wins under your belt. So the easiest way to do that is to list your debts from lowest to highest, from smallest to largest. Pay the minimum payments on all the debts except the smallest one. That one you're going to gang up on. So in this example where you have the $3,000 tax refund, well, you can sock away that right onto the smallest debt. You may knock that out. Then whatever you're doing on the smallest debt, you add it to the next smallest, and so on, and it's snowballing. Now you get some wins under your belt. You get some momentum going, just like in sports, Djokovic at the Australian Open, you get some momentum, and then you're unbeatable, and then you can knock this stuff out.
I kind of look at it like when you're doing something around the house. When you have all these jobs to do around the house, do the things that you can get out of the way right away. That way, when you start the big thing, you've accomplished so much already that now you can tackle the big thing.
Get the momentum, John. Mojo, baby. Get that momentum going.
You sound really positive about saving money, and it is a great thing, especially when you do have money in the bank. How much money should people have saved away in case, you know, you lose a job or something horrible comes up?
Good question. You definitely have to have an emergency fund. So ideally, that should be 3 to 6 months of living expenses. So if it's a 2-income household, you could probably shade down to maybe 3 months, because it's not likely that both spouses would lose their job right at once. If you're single or you're the only breadwinner in the household, you need to do about 6 months. So while you're putting or socking away money for that emergency fund, if you have some debt, maybe $1,000 just to start an emergency fund would do that, and that would be a good start to have for an emergency. So
is there a certain percentage that you should approach when you do this? Like, should you think, okay, every paycheck I get, like, sock away 10% of it, or how should you look at this?
I'm going to bump you up to 15.
Okay,
15%.
There you go.
Okay.
Yeah. So 15% of your gross income is what you ideally want to save, and that can be at your 401k at work. So if you're not doing that already, go down to HR, find out what they're offering. In a lot of cases, the matches that went away from companies a couple of years ago in the market downturn, those are back. So find out what the match is, and don't leave any free money on the table.
Absolutely.
In a lot of cases, they're matching half of what you do, maybe up to 6%, but that's free money.
I know we were talking just before, because I'm out of debt. One of the things I did was I started getting rid of all the things that were not necessary in the house, like cable and things like that. I got rid of them to pay down my debt. Good idea to take a look at what you're spending money on and how you're spending it?
Absolutely. We find people don't have any idea. They spend $5 a day at Starbucks. Nothing wrong with Starbucks. I mean, I love that too, but you know, that's what, $25 a week? At the end of the month, there's $100 you could have been doing something with, either knocking out debt or sticking into a Roth IRA. So there's a lot of little things that you just don't think add up. If you start tracking your receipts, and a lot of folks will use financial software, Quicken, or there's others out there to track their actual expenses, you run a report on that, and you can find where the money is leaking out.
Yeah, sometimes even just having cash with you saves you from pulling out that credit card or the debit card, and that's something I think that our society has really gotten away from. And do you think that has hurt our society a little bit?
Well, it certainly hurt us in our pocketbooks.
Right.
It's proven that if you have a credit card, it doesn't hurt as much when you're swiping that as if you have to take out the actual Benjamins, the greenbacks, and actually pay it, like you say, in dollars. That hurts a lot more than just swiping the credit card.
Right.
So general overview here, this is really changing behavior. You have to change your behavior if you want to get out of debt.
That's it. It's behavior change. Get some wins under your belt. once you're debt-free, it's pretty easy to start accumulating wealth.
Yeah.
Terry, thank you very much for your time.
Yeah.
Well, thanks you guys.
Yeah, you're such a positive financial
I know, it's
person.
rough on a Sunday morning.
It's so refreshing.
Life's not as depressing anymore.
It's not so bad out there. Okay, still ahead, more ways to save. We will tell you about the products you should have in your home that will pay for themselves in just a month.